Lovely to chat to you, Paddy. Firstly, can you just introduce yourself for me? So I've got your name and your title.
Yeah, I'm Paddy Osborn. I'm the Managing Director and Academic Dean of the London Academy of Trading.
And I believe you are from Tunbridge. Is that right? You live in Tunbridge?
Well, Hildenbury, yes. So just up
just outside.
Up the road, yes, indeed, yeah.
Okay, super stuff. Well, firstly, Paddy, I mean, what a situation we're in at the moment. I mean, in layman's terms, can you kind of just explain to us what the sort of situation is at the moment with the pound? And I'm sure an awful lot of people are hearing what we're saying in the news and perhaps not completely understanding everything. Could you try and sum it up for us?
I can try. Let's have a go. So basically, it's I mean, yes, this week has been very dramatic. Last week has been dramatic with this very different approach, I would say, by the government. I mean, they've completely thrown everything they've done in the past in the bin and tried a different tack, which is basically not quite modern monetary theory, which is basically you can just borrow as much as you like and give it all away. But it's something in that sort of direction. Now, before that happened in markets, financial markets, there's been a sort of a bigger, longer term thing going on because stock markets, for example, are already down in America, down 20%. And this is all before this happened. And this is because all central banks around the world are raising interest rates because of the global inflation. And fortunately, central banks are in a very difficult situation because the inflation is not their fault. The inflation is just due to people coming out of COVID, spending more money, supply chain issues with getting goods to the right place. And then you had the Russia-Ukraine situation, which put pressure on the price of oil and gas and grain as well. And so there's a global inflation, and it's up to each of the individual central banks to try to calm the inflation down. And the only thing they can do is raise interest rates. So it's a very difficult situation for the banks, and it makes it a very difficult situation for the man on the street. We've got inflation going very, very much up and the economy not doing so well. And now we've got sterling struggling because basically what's happening is the markets do not like what the Chancellor has done. They think it's too risky and they don't like it. So they've been selling the pound. This is bad for some and good for others because, a weak pound means, when we go on holiday, we don't get so much foreign currency. So that's more expensive. For companies that import goods and then sell them in the UK, this is also bad because their costs of importing is more expensive. But then on the other hand, of course, you've got the big companies that export. And if they're a UK company and a lot of their business is overseas, euros and dollars and various other currencies, selling things overseas, when they bring them back into the UK, they'll have a lot more pounds. So it's good for exporters, bad for importers, bad for us going on holiday.
And what about those who perhaps got savings or perhaps want to invest money in particular areas at the moment? I mean, what sort of things should they be doing?
Putting it back in the building society almost, because interest rates are going up so fast. It's actually now becoming, for years, for 10 years or more, we've had virtually zero interest rates. So putting your money in a bank or building society, keeping it safe has actually not been working at all. And even with inflation at 2% and you're earning 0.5% on your savings, you're still losing money. We've now got, inflation up at 8, 9, 10%. So it's eating away at the value of money. Whatever you do with your money, inflation is going to eat away at the value of it. So you've got to do the best you can. Now, putting money in financial markets at the moment is difficult because, stock markets are going down. I think the expectation, mine anyway, is that stocks will not recover this year, may even go further down. And I wouldn't be surprised. The last time we had this thing, which is called stagflation, which is stagnation of the economy, so recession and inflation, the US stock market, this is in the 70s, the US stock market went down 50%. It's currently down 20%. So there is scope for further decline. So I wouldn't put money particularly in the stock market. Gold is not even doing very well, to be honest. Bitcoin is struggling and not doing anything, just sitting there having collapsed 60, 70%. Interest rates are going up. So I would say, it's difficult because you can get 3, 4% maybe interest, but then inflation is eating away at 8, 9, 10%. So at the moment, it's very difficult. I would say that it's not for everybody, but also sort of short-term trading because you can take advantage of falling markets when you are trading. So you've got to understand what you're doing. That's actually what we do. So the Academy of Trading, we teach people how to manage risk, how to understand the fundamentals, how to understand charts and technical analysis, and build a sort of structured, robust strategy to try to make money generally in a fairly short term. And I think when markets are as they are now, which is sort of pretty much going down pretty much across the board, the only opportunity really I can see is in short-term trading various different assets, whether it's currencies or whether it's stock markets or individual stocks or gold or oil or whatever. I think that's probably, it's not a bad place to put some of your money, certainly not all of it.
And if you already had stocks and shares, I'm sure it's been a very stressful week. Do you just not touch them? Do you just leave them where they are and just hope that things recover at some point?
Sling on and keep your fingers crossed. I mean, that's what most financial advisors would say. You've got to ride the ups and downs. Regular saving is quite a good thing. thing. So when the market goes down and you're saving £100 or £200 a month, whatever, into the market, then of course, as the market goes down, you're buying into the market at a cheaper level. So that in the long term will even out. If you have a portfolio at the moment, you've got a couple of options. You could be very dramatic and just sell a lot, sit on your hands for a while, hope the market goes down and buy it all back in a year. That's quite dramatic, and it doesn't always work because the market's, if it doesn't go down, then you've got to get back in again at probably at a higher level. So you'd be giving away some money. You could ease off a little, so sell a little bit of your portfolio just to sort of limit the risk. And I had a conversation yesterday with a chap who was looking to invest a couple of £100,000 in the stock market, but he was obviously concerned about it going down, so he wanted to hedge it with a put. So you could trade options if you wanted to. That's a little bit more technical, but it's not rocket science. So there are all sorts of different things you can do. But yeah, I think the general, not a financial advisor as such, but the advice they would be giving would be sort of hang on and let the managers do their job to try to make the most of this sort of bear market, basically.
And can you kind of put this past week into context as far as how dramatic it has been compared to other events in recent years? I mean, is this the most dramatic we've seen for a long time?
Certainly in terms of sterling, it's, I would say, more dramatic than the outcome of Brexit. In fact, when Brexit happened, we had, before Brexit, we had sterling against the dollar at about $1.50 to the pound. It's been up above 2, several years ago, and it generally trades around sort of 1.4 to 1.6. Brexit came along and it collapsed down to 120, which was the 40-year low at the time. And we thought, wow, that's quite stunning. It then went sort of up and it sort of wobbled around a bit, and then just now it's collapsed to an all-time low. It has never ever hit this level. I think it touched about 103 in the last few days. It's bounced now. It's around 108, so it's bounced quite strongly in the last few days. But first initial collapse that we saw was the lowest it's ever been against the dollar. The last time it was down at 105 was actually 1985, which was in the Latin American debt crisis when the dollar was particularly strong. So basically, it was a historical moment. Whether or not it's going to keep going down, I don't know. The dollar is fundamentally strong at the moment across the world against every currency, so that's not helping. I'm actually hesitant to think that we will go back down to that level. I think that was very much a panic move down to 103. It's bounced very quickly back up to 107, 108. I think it'll stay above parity, in my view.
Are you able to ever predict how well it could recover and how long that recovery will take? Or I mean, it's very difficult, isn't it? I guess at the moment. What are your thoughts over the next, as we move into Christmas and into the new year? I mean, it's not too far off, is it?
No, indeed. It is always tricky to try to predict things, especially when there's so much sort of uncertainty in the fact that the government's come out with this rather dramatic plan, and then now there's people shouting, you've got to reverse it, and they're saying we're not going to, and then they're going to have a budget, and then have emergency meetings and all sorts of stuff going on. It's difficult to predict what might come out of that. If they suddenly say, you know what, that was a mistake, which I don't think they will, but if they did, then suddenly the pound might sort of recover back up again. I think we've seen the worst of the panic. First initial panic that we saw last week and early this week was, I think, the worst of it. And I just don't understand. Well, I do understand, but I don't. It's very foreign to see the pound down at this low level. So we're used to seeing the sterling dollar at 120, 30, 40, 50, something like this, and down near 1 to 1 is very unknown territory. I think there will be it depends, actually. It depends on a lot of things. It depends on whether or not this policy works. And to be honest, I don't think by Christmas we're going to know, because inflation is still going to be very high. People are still going to be sort of struggling. They're doing as much as they can, I think, with the energy crisis, which I think is a good thing, because that would have really caused a lot of people to suffer very badly. And they're putting tens of billions of pounds into that to help them. So to be fair, they've come out with a sort of nuclear option, and they're giving it a good shot to support the economy. It's not their fault. It's a bit unlucky, really. It's not their fault that the oil and gas price has gone up so high. But they've got to foot the bill, really. So along with the public. So it is tricky, but I think the worst panic was last week and early this week, and I think the market's now getting its head around this new level, and we may see a gentle recovery. But I think stock markets, I'm not too bullish for stock markets for the coming 6 months or so. A lot of people want to. There's a few things. One, they want to make more of their money, which is absolutely obvious. The other thing as well is a lot of people want to improve themselves, learn things, continue to develop their own knowledge and that sort of thing as they go through life. And particularly now when financial news is sort of front and center, and particularly sort of headline news at the moment, a lot of people don't really understand what's going on and how it works. So what we try to do at the Academy, educate people as to what is going on, how it affects markets, and actually how you can take some of your savings and potentially enhance them quite significantly through trading these shorter term events. So that's something that we do. We try to be as flexible as possible to let people. Most of our students are working people, average age of 37, and so we're very flexible in terms of delivery online or on campus and schedules, and people can stop and start whenever they want, and they can spread payments and all these sort of things. So we're trying to not campaign, but I'm sort of trying to enable people to understand better what's going on in the world. Rather than be confused and worried, they can be a little bit more empowered and knowledgeable about what's going on in the financial world.
I think we all need that at the moment, Paddy. I'll get signed up. Lovely. Thank you so much. Lovely to chat to you, Paddy.
Great
Have
stuff.
a good rest of the day.
Take care.
Thanks ever so much.
Thanks a lot.
Cheers.
Bye-bye.
Bye.